So did you receive a distribution from an IRA this year? If so, you might have received a 1099-R and you're trying to figure out, well, what do I even do with this? Where does it even appear, right? Well, in this video, we're going to walk through line number 4 on our 1040 is part of our line by line series. So my name is Brian Winter. I'm a tax attorney and tax professor, and this is part of my series where I'm going line by line through the entire 1040. Now, I also have a walkthrough which takes you through the entire 1040 as an example. So this video helps in case you had any questions as you're doing that walkthrough. It provides a little bit more depth. All right, so what is line 4? What are we dealing with on line 4? Well, this is where we have our IRA distributions, and they can be all types of different IRA distributions. It could be your traditional IRA, it could be a SEP, it could be a Roth IRA. It doesn't really matter because if you got a distribution, it's still going to be reported on your 1040. Now, it may not be taxed. So those of you that are sitting here watching may be going, wait a second, I have a Roth IRA. No way, I'm not being taxed. Well, you're probably right on that. However, it still appears on our 1040. So when we look at the 1040, we're going to see that there's going to be a 1040 line A, and then there's a 1040 line B, and we have to be able to separate those. So when we're looking at the 1040A, that's all the distributions that we actually received. And then when we go to 1040B, that's where we're actually going to be taxed. So let's take a quick look at what the 1040 looks like for those for that line. I'm going to show you both lines 4 and 5 because conceptually they're the same. I have a separate video that goes through line 5 though. But let's take a look right now. So what we're looking at here is a little snippet from the 1040, and it's focused exclusively on lines 4A, 4B, 5A, and 5B. Now, I put these together because conceptually they're handled the same way. So if we look at line 4, what we're talking about is our IRAs, and that's what this particular video is about. But if we look below it, then we have 5, and that's going to be for pension and annuities. So the way that these are set up is where you see the 4A and then line 5A, that's for your total distribution. So your total distribution from an IRA is going to go in 4A, and your total distribution from a pension or an annuity is going to go in 5A. Now, like I said before, some of you are probably going, wait, but I have a Roth IRA. It's not taxable. Well, you know what? We only add the taxable amount in 4B, and then, of course, if it's a pension, in 5B. So you're right. If you have a Roth IRA, then that full amount of your Roth IRA distribution is going to appear in line 4A. It's not taxed, most likely. So it's not going to appear in line 4B because 4B is only going to be the portion of our distribution that appeared in line 4A that's actually going to be taxed. So what we have is the full amount and then the taxable amount. So full amount 4A, taxable amount 4B. So that's the way it's structured. Now let's go ahead and continue to move on so we can take a look at some of the more other information that's included. All right, so when we looked at that little snippet on the 1040 of lines 4 and 5, let's take a look to see what's going in each one of them. So when we're looking at line number 4, we're using the green. That's what's going to appear. So that's going to be your traditional IRA, your SEP, your simple, and your Roth IRA. All of those are going to appear. Now, whether it's all going to appear in line 4A, some of it may appear in line 4B, depending on whether it's taxed, but it all does appear in line 4A. You can see that it's not going to include things like your 401k, your pension, or a 403b for those of you that are qualified for those. It doesn't appear on line 4. Those are actually going to go on line 5, which will be in our next video. So if you have a traditional SEP, simple, Roth, any of those, yes, this is where you're looking at line 4. Now, I'll tell you, a lot of the things, if you're using any type of tax software, it's doing these calculations for you. But here's the thing. You need to go ahead and you need to check to make sure that everything was processed correctly because it's not always done correctly. So you need to make sure that it's there. And then this is also going to help you when you're trying to determine, hey, how do I reduce my taxes for next year? So very important to be able to understand these concepts. So to do this, what's going to happen is you're going to receive a 1099-R, or you should be receiving a 1099-R, and you'll receive that for both your things that are going to go on line 5 and line 4. It applies to both of those. So that's why I'm saying there's a lot of overlap. But you may receive multiple 1099-Rs. It depends on, if you have a pension and you have a traditional IRA, you may receive 2 of them. Either way, we're going to go through and we're going to see what appears on that 1099-R and what information specifically we need in order to complete our 1040, at least for the lines 4 and 5. So let's go ahead and take a look at that right now. All right, so this is what you should be receiving if you're getting a distribution from your IRA. On the left-hand side, all the stuff's going to already be filled out for you, but you're going to have the payer information, their tax identification number. All that is going to have the recipient's information on there as well. So it'll have your information on here. Now, what we're looking at for purposes of this video is we're looking at box 1 and box 2A. So if you look up at the top part, you'll see box 1 and it says line 4A. So I typed that in red up there for you. So you know that what we're taking in box 1, which is our gross distribution, it's the entire amount. So even if you have a Roth IRA, that entire amount is going to appear in box 1. You're going to take that amount and you're going to go and transfer it to your 1040 on line 4A. Now, if you're using tax software, it's already going to push that over to you. So that'll already be brought over to your line 4A on your 1040. Now, the next line, 2A there, that's an important line. This is where it really starts to impact us for tax-wise, because line 2A on our 1099-R, the document we're looking at, is going to be the taxable amount. So this is going to go to line 4B on our 1040. Again, software is going to push it over there for you. If you're doing it manually, this is where you're taking that information from. But here's the key thing. You need to know, or you need to check to make sure that that is accurate, that everything was transferred accurately. Because you see, if you put the wrong amount for line 2 there, so the wrong amount goes on line 4B on your 1040, then you're you're changing your tax outlook. So if you said, oh yeah, well, I'm going to put the entire amount from 4A and I'm going to put it on line 4B, holy cow, now all of your distributions are going to be taxed, even if it was a Roth or something that's not supposed to be taxed. So be very careful. Always double check here, because this is an issue that can really increase your taxes on it. So you want to be safe on that. And then the other big one is just 7, and it's going to tell you why something's taxable or not. So it's going to be a code. If you look at the instructions for the 1099-R, it gives you a list of what each code means. So you'll have a code there, and you can take a list at that. Look at the instructions. It'll tell you specifically what that code stands for. So this is what you're getting. It's your 1099-R. You may receive more than one, depending on whether you have multiple accounts, right? And this could be line 4. It could also go on line 5, but we'll take a look at line 5 in the next video. All right. Well, let's go back and see how this stuff is going to actually impact our taxes now. Okay, guys, this is what the 1099 is kind of telling you and how it impacts us on our 1040. So if you had a IRA, and with that IRA, you're making your traditional contributions before tax. So it reduced your taxable income during the years in which you're contributing, right? That's your typical type of scenario. Well, in those scenarios, what happens is your contributions were not taxed, and as it continues to grow through your investments, it has not been taxed. So when you get a distribution, all of a sudden, your contribution plus any of the interest or growth is going to be taxed. So in that scenario, the entire amount will probably appear on both line 4A, is your distribution, and 4B, because the total amount is going to be taxed. Now, there are situations to where it doesn't make its way over to 4B. So if you make some contributions that were made after you're previously taxed on it, well, those additional contributions that you made that had already been taxed should not be taxed again. One of the concepts in taxes, we don't want to have double taxation. Corporations are different, but we generally try to avoid double taxation. So in that scenario, your entire distribution will appear on 4A, but then what you're going to look at is on 4B, it's only going to be the part that hasn't been previously taxed yet. There's other scenarios that you could be looking at, like a rollover. You may be rolling it over between going to a different employer or whatever. You may be rolling over your contributions on those types of things. Hey, you know what? That's fine. You can do a rollover. Generally, it's not going to be taxed. It'll still appear on 4A, but it's not going to appear on 4B as long as you're meeting the requirements. Roth rules. So remember with the Roth thing, generally if you have it in a Roth, then it's not going to, it's been after tax contributions. So the growth and the contributions, they're going to appear on line 4A, but they're not going to appear in 4B because they're not going to be taxed. So only the part in 4B is the thing that's really impacting us for tax purposes. Okay, that's where the impact is on our 1040. Now the IRS is still requiring you to go ahead and to report your Roth distributions and non-taxable distributions because they use that for tracking purposes. So what I'm going to do here is I'm going to go through and I'm going to give you maybe 5 to 7 different examples. I'm going to put it in a table, and we're going to go ahead and we're going to look at this table, and we'll look at different scenarios in which you might see a situation that arises and how it's handled on 4A and 4B. So hopefully that provides some clarity for you if you're running into these different issues. So let's go ahead and take a look at that. All right, so here's some examples of our most common scenarios that apply when we're looking at line 4. So let's go ahead and see. We have a traditional IRA withdrawal. So with our traditional IRA, we're making contributions before tax. So when we take it out, we're going to have to pay taxes on it, right? The full amount, both our contributions and the growth. So if we look at the green box, the first one, what we're looking at is we're going all the way across traditional IRA withdrawal, and then line 4A, the full amount, our entire withdrawal, and then we're also going to put the full amount on line B because it's going to be taxable. Now, if we go down, we see IRA rollover to another IRA. Well, we're rolling it over, so it's an IRA to another IRA. We're not really taking out withdrawals. We still have to do for tracking purposes. We still report it under 4A, but it's not going to impact us for tax because under line 4B, we're not going to include it. It's going to be a 0 there. So then if we go to the 401k to the IRA rollover, all right, same thing. Full amount is going to be included in 4A, but in 4B, we're still going to be at 0, nothing to worry about. Now let's look at this one, traditional to the Roth. We can make a conversion from traditional to Roth. Well, those are taxed separately. So when you're taking those and you're moving it over to a Roth, you're taking something that was not taxed previously and you're moving it into an account that's going to be taxed, right? So what's going to happen in that scenario is you're going to include the entire amount of the distribution under 4A, this is entire amount, and then you're going to also include the entire amount under 4B because it's going to be taxed. So why would somebody ever want to do something like that? Well, they might be required, or they might be concerned about our required minimum distributions, which is the next one down. So they may not want to have to take things at a specific period of time, or maybe they think, you know what, I want it to continue to grow interest-free from that point on. So there could be some strategic reasons to it. All right, so let's look at our required minimum distributions over here with the traditional IRA. So what's going to happen, because if we're dealing with a traditional IRA, that's the first thing we talked about, right? So the entire amount that we had to take out is going to be there. If we've been making all those contributions tax-free, guess what? As time to pay the fiddler, now we're going to have to go ahead and we're going to have to include that, right? So now it's going to be usually included in the full amount. The next one, non-deductible IRA withdrawal. Okay, so if this is a non-deductible, what that meant is we didn't get the deduction when we first contributed it. So because we didn't get the benefit of it, we basically have a basis in it. We already have some money that's already been taxed in it. So what's going to happen is we include the full amount. It's going to appear on line 4A. But because we didn't get that tax break on it, the contribution, the amount attributable to the actual contribution will not be taxed, but the growth will be taxed. So we'll have a partial amount on line 4B. We're not going to have the full amount because we made contributions after tax. So that's why it's not the full amount. And then the final one is a qualified Roth distribution. Hey, that's not taxable, but we still list it all on 4A, but for tax purposes 4B, it's 0, tax-free, right? Okay, well, we're just about done here. We'll start to wrap this up. I just want to talk about a couple common mistakes that are made, and then we'll conclude this video. Hey everybody, if this video has been helping you or the series has been helping you, please make sure you go ahead and subscribe to this channel and hit the like button. All right, so let's look at some of the common mistakes here. We have our errors over there. So some of the issues that can happen is you end up taxing the rollover. Now that can be a huge problem because if you're doing that, what you're saying is line 4A is also appearing in 4B. 4Bs are taxable apart. When we put any item in 4B, it increases our AGI, which goes to taxable income. So you're going to be overtaxed on that. So you want to make sure you're not taxing any rollovers. That's not a taxable event if you're following the rules. Missing form 8606. So you're using an 8606. So basically what you're saying is, hey, some distributions are not taxable. Well, the IRS doesn't know that. They always assume everything is going to be taxed. So if you include that, then what happens is if you don't include that, what happens is the IRS just assumes it's all taxable. So you want to make sure you're including your Form 8606. Most tax software will already produce that for you somewhere in there. It's behind the scenes on that, but you want to make sure. Other times confusing 4 and 5. So sometimes you get lines 4 and 5 mixed up, so that could have some issues. And then especially if you get lines 4A and 4B mixed up, that's a big issue. Or 5A and 5B, right? Because you're putting a larger amount under the taxable portion, and you do not want to do that. And then even though you're using a tax software to do this, or most likely using tax software, don't just blindly trust it. All right, so 2A is so important because that's the part that's telling you that you're actually being taxed on it. Go through your records, make sure it's been brought over correctly, make sure that your document is correct. Don't pay taxes if you don't need to be paying taxes on that. All right, y'all, thank you for watching this video. What I'm going to do now is I'm going to go ahead and I'm going to do a video that's similar in concept with line 5. Remember 5A, 5B, it's the same type of concept. It's just different type of plans we're going to be dealing with, pensions and annuities. So go ahead and check that video out. Thanks for watching.